The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at Apple in just a moment, but first we'll start out with the DAX index like we usually do. As you can see, we completed that big Gartley down there. This is the hourly chart that happens to be a Gartley on the daily. And we rallied up to the 78% retracement of the previous day's high, which was also a 382 off of the high, and then backed off quite a bit, well over 200 points very, very quickly. Now, that usually is a bearish pattern, but we'll have to let the rest of the day tell us what's going on from here. Okay, let's move on to Apple. That's got everybody's news. The company that gets more free advertising than anybody in the whole world. One of the first things that I do in the morning is I turn on Bloomberg just to see that the world has not come to an end and that there haven't been any assassinations or government overthrows, currency devaluations, some kind of, crazy news. And of course, I had realized Apple's earnings were quite good yesterday. I just wanted to see where it was trading, and I was watching it there for about 15 minutes, and the high had been 159.90, and then it had backed off to 158.55 or so, and was trading there, very, very normally. I mean, 10, 15 cents in between trades, and of course the volume there is quite small. But what happened was, all of a sudden, the quotes changed from 158.55 to 159.60. I thought my eyes were playing tricks with me. And I said, well, that can't be right. So what I did was I went to my machine to check to see what was going on. And this is what was actually happened with the Apple. So when you are watching these overnight trades on Bloomberg or CNBC, remember it is Bologna serendipitous, also known as BS. I wouldn't trust those as far as I could throw them. That's just not accurate information. And that's just my 2 cents worth, but I've seen this enough to happen that I wouldn't actually trust it. That's basically what I would be watching. So keep an eye on it. I mean, the whole world knows that Apple's a great company. I don't think anything's different than where it was yesterday, but it opened, 7% higher into new high ground. And of course, that's going to take the Dow Jones Industrial Average to the 22,000 mark, because we're only 20-some points away, and the Dow is up 40 points pre-market, so we should be able to make 22,000. I don't think they're going to ring a bell there or anything, but I think it'll be important enough to, really, take a very, very close look at it. I think that's the important thing to remember, that's the main thing, that's just another number, like anything else. Now, let's just take a look at the Dow Jones for just a second here. Let me get the chart up so we can take a look at it. There we go. Yes, I believe those bonds are going to probably make the 78% retracement, which I believe is around 154.10. 12. I'd have to double check that. You folks that are watching those numbers, you could respond to Mr. P, because I believe it's 154.14 to 154.20 is where I think it is. But let's take a quick look at the Dow Jones. What I've done here is this is the Bradley model, of course, and as you can see, we had a gap up yesterday, and we're going to have a gap up today too. So we're going to have that was a little doji yesterday, and you'll notice where the Dow Jones would be without Boeing Airlines. Boeing Airlines, folks, is 45% of the movement in the Dow since March 1st. 45%. That's a huge percentage. And basically what it's showing you is that these high price stocks like Boeing, and Goldman Sachs has done it before. If you remember back on March 20 or February 28th, Boeing did the same thing up at 265, and now it's at 229. So these stocks takes turns, and this is Boeing's turn. So, and now it's going to be Apple's turn. So we're up here. Notice here the Bradley model is heading down between August and October. I still have to believe that. I got a really nice email from Bill Meridian yesterday, and I asked him the question, does he still hold by his October lows? And he said yes. And he said, I believe we're somewhere in the highs in this area. How high it can go, I don't know, he said, but I think the lows will be made somewhere. What market that's go up straight up, folks, they usually come down straight. They usually come straight down. So that is right. No, that is the regular Bradley model, Jay. That's the blue is the regular, and then when I invert it, I use the red. But that is the blue one. And we will notice. Now, tomorrow, we're going to have Norm Winsky on from AstroTrend. He's got some very, very important stuff for August. He'll be on tomorrow at 9:30, and so you don't want to miss that. He's really got some good things to look at. We got several planets, I believe, are going into retrograde motion here pretty quick. Plus, we have a solar eclipse on the 21st. We have a lunar eclipse along with the full moon on the 7th, and so that's one of the things that we want to do. I had a question from one of our listeners, not related to anything in the markets, but it was rather interesting. He's going to be coming from Europe into Chicago to visit some friends, and he wanted to know the things that would be fun to see in Chicago. Chicago is one of the funnest places to go to. It is one of the most beautiful cities at night, not as beautiful as Hong Kong, but unfortunately it is a beautiful city, no question about it. So here's the thing that I would do in Chicago. I'd be sure to go to the art museum. You just go down by Soldiers Field, and you got the Museum of Natural History, the Art Institute. All of those are really great. Go to a Cub game, absolutely, to do that, and go to Gene and Giorgetti's Steakhouse up on Franklin Street underneath the L. That's the old Mafia hangout. It's probably one of the best steakhouses in Chicago, and they've got a lot of them, and plus a lot of other things. I mean, it's just loaded with things to do, and I imagine with his friend he'll be able to see everything that you want to see in Chicago. But the most important thing, you're most probably going to be there on the night of August the 7th, which is going to be a lunar eclipse, and it's going to be a full moon. And if you get a chance, take one of the boat rides across the Chicago River out into Lake Michigan and to see the skyline of Chicago and that full moon. In 1990, on my birthday, a couple of traders from the Board of Trade, along with Mark Douglas and myself, we went out on a small yacht to see all of that, and it was really spectacular, folks. That would be August the 7th is the lunar eclipse, full moon. August the 21st is the solar eclipse and the new moon. But the full moon is going to be out there, and it's going to be lit up like daytime, and you get the eclipse too. So you really should do that. That would be the best thing to do, because Chicago has a beautiful skyline. I mean, skylines, everybody every place I've ever been, I've been to a lot of places. Hong Kong, by far, hands down, the most beautiful city at night. It's pretty nice during the day too, but at nighttime it has no equal, especially during the Christmas holidays, because all of the buildings are flashing holiday colors and pictures. It's just really, really something. So take a look at that. That's a really good thing to do. But Chicago's a great place. Just don't go to the south side of Chicago, because that's where the problems are. But I don't think anybody would take you there anyway. Okay, we're going to take a break here pretty quick. Wow, first 14 minutes went very fast. We've got to come in here and do some of these others here, so bear with me here. We'll be right back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were going to take a look here at the Treasury bonds. I posted the chart for Treasury bonds in the room, and as you can see, we're right at that 78% level at 154.12. We've hit 154.11, so it has got up to that spot. Whether it's going to go powering through or not, we'll have to wait and see. The bearish pattern in notes and bonds still is in play, in my opinion. If we get above 155, in the bonds, that would break that sequence. That would mean that the Treasury notes would have to get above the 127 level. So make sure that that's something that you keep an eye on. The euro, we've had several moves. We posted the euro yesterday, of course, at that 128. I get notes on my mind. Okay, let's put it. The euro is actually, we hit 118. 118.60 last night. We're trading at 118.20 right now. Made a higher high than the previous day by a few pips. The British pound made a higher high than the previous day by 2 pips, and the Australian dollar is still in a downtrend. So all of that tells us that we could be in for a turn here in the euro. But any move above this 118.60 now would certainly verify that the U.S. dollar index is going to go a lot lower, but we'll have to let the market tell us, what's going to happen, as we do most of the time anyway. Regarding the grains, I've had a couple of questions here about the grains, and then I will cover the copper in just a little bit, because copper has a real interesting pattern also, but we'll watch it in just a minute. But the grains, folks, we had Simon Only on from Sylvius Financial yesterday, giving us some great information, telling us about the fundamentals, the weather breakdown. Basically, what it looks like is that we're going to be coming down into Monday, folks. That's the we're only a few days away from there. That's our solar eclipse, our lunar eclipse and full moon, and that's where I'll be looking to buy wheat, corn, and beans. Now, corn stopped right at the 78% level. Meal actually stopped at the 61% level and actually rallied a little bit. So there's going to be a good buying opportunity, but I don't think we have to wait. I think we have to wait until we have this full moon coming in here on Monday. That's what I would be doing, because the grains react to full moons and new moons as well as about anything that we have. And we still are in a weather market for beans, not so much for corn, but for beans, oil and meal, we certainly are, because this is the pollination time, the first 3 weeks of the month of August. So we should keep that closely in mind. But we've got a little bit farther to go on the downside. Now, I've had another question about the natural gas that we talked about the other day, that we had a possibility of it rallying, and it rallied for 3 days very, very mildly, and then, of course, it gapped down, and that's where the failure was, at that 288 level. So what I usually do is, when a market breaks down like that, I keep following it just to see if there's another pattern in here that might pop up, and this is what it's showing today in the natural gas. We'll put this up here so we can take a quick look at it, but this is an hourly chart on the natural gas, and you can see where the failure occurred, and that's where you certainly knew you were wrong when you saw that. That was an overnight move, so there's nothing you can do about that if you were long, and you wouldn't have been long because you were waiting for a better price that you would have had way back on the 24th. So at the worst situation, and you had the ABCD structure to the upside, which gave you the first profit objective, which was 12 cents higher. Then when it collapsed, you'll notice that it came down, and look what's happened over the last 3 days. You have your head and shoulders pattern just set up really about as good as it can get. If you notice, the left shoulder and the right shoulder are actually equal. That is one of the things that you really need to get a perfect head and shoulders pattern. The left shoulder and the right shoulder should be equal. Also, the distance between the shoulder and the head and the shoulder should be equal. And if you draw the pattern in, you can see that's a Gartley pattern down here at this 278 level. I don't know where it's trading right now, but that's the way that thing sets up. I don't know if it's going to be, but that's a very low-risk trade at that point. Those are the kind that you want to, that you'd like to try to find. Now let's put up this, we'll take a look here at this copper. Just give me 1 second to bring the chart up, and we'll be okay. And trying to see, hold on a second. Wow, there we go. Where do we at this copper? E, F, G, H, A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. Okay, now we got it. There we go. Okay, we'll get this copper up here right now, and we'll take a quick look at it. And I'll post it into the room in just 1 second, and then we'll be ready to go. Hopefully, here we are. Okay, here's the copper chart coming in, 10-4. Okay, oh yeah, the natural gas rallied right off of that. That's good, that's good. So it's trading at 281. The low was 278. So, if you're in that trade, you put your stop at break even and take a look at it. All I was doing was just reiterating what someone was asking me, and that's what I'm looking at. We'll take a look at the copper here. You see we've had a really big move. We went up and we made the 1.27 expansion a couple of days ago. Right now, we're only down about 3 cents from the high. So there's nothing to get excited about on either event. My suggestion here is that if it tries that 291, 292 level and doesn't get through it, then I would say there would be a possibility for a movement higher, in the market. Remember, Rich Anderson has been on, and he's always talked about Dr. Copper, where copper mimics what the stock market is doing. And as you can see, the copper has been very strong, and of course the stock market's been very strong. So that's another one that looks, pretty interesting. So, but copper is very good for trading, folks. You need to use about a 3-cent stop of $750 because it does get a little wacky at times, but it does pretty good. You'll notice that breakout that occurred on the 25th. That was the real key level, because once we exploded above that 78% level, you see there was an ABCD pattern taking you up at least another 5 cents higher. And then, of course, you took out the old highs, and that took you up to the 1.27. So that's what it looks like in copper. Not too much exciting, going on right here, but we'll certainly, watch it for sure. Okay, now we had one other question. No guest today. Tomorrow will be our guest, Norm Winsky, and then we'll move on from that level. One other question that one of our listeners emailed me about, and I talked a lot about the possibility of the August 13th date as being a crash low. That was based on whether the market had topped. And of course it did not, so that date does not count anymore. There's no other date there, but that was set up to be 55 days down from the high. That would have been sometime in early July. I don't remember which one it was, but it was high for a little bit and then it backed off. But that did not happen. So as long as the sequence is still in play, you have to look at it. But once that sequence is broken, like this one is broken, August 13th doesn't have any meaning at all. I hope that is very, very clear to you folks, but that's the main thing, because we had the same setup from 1987, the same setup in 1929. They were both 55 days from the highs. They'll probably do it again this time, but whatever the high is, who knows. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were going to talk a little bit about the euro here. I've posted it in so that you can see the little structure that's been happening. As you see, the big ABCD pattern is completed up here at this 118.50 level. Each time we backed off, it's only been a 38% or a 50% retracement of the previous swing. So it's still in a bullish mode, but it's completed, some pretty good patterns. And not only that, but if you look at it on the daily, which we've done before, it's basically a vertical move. I mean, it's just, a moonshot. Looks like Boeing Airlines almost. But that's it. Let's just get on to hold on one second, please. What I'd like to do is give you my 2 cents worth. This is the Dow Jones Industrial Average on a 15-minute chart overnight. As you can see, what happened when and this is correct data, folks. I've double-checked it with Mr. Twentyman. But as you can see, when the Apple earnings come out, the Dow Jones rallied 100 points in the E-mini Dow Jones, 100 points. So that's what happened. And believe me, this was actual trading, but that shows you the emotionalism of the market. Now, as we've seen before, many times these markets will react, quite a bit to this stuff. But that's a big reaction, folks. We went up 100 points and down 100 points in a matter of 15 minutes. So that tells you that there's a little bit of trepidation somewhere in some of these markets. So keep an eye on it because we did get up there. I don't know if we're trading above 22,000 in the Dow now. We should be pretty close to it, but usually they wear hats and bells and whistles down there in New York when that happens. So does anybody? Yeah, 22. We made it! Yay, yippee! So they're going to be having a big thing. So we'll break out and this is the 7th day up in the Dow, folks, which makes it an outlier event. The odds of 7 days up, in fact, if it's up 5, 6, or 7 days, the odds of it being down the next day is better than 65%. But if it's up more than 8 days, you could have a run where it could go quite a bit. But we're able to see this is the biggest, the fastest that the Dow has moved 1,000 points in its history. I got that off of Bloomberg, so I hope that's right. I might be wrong, but the guy sounded like he knew what he was doing. But anyway, we'll just keep an eye on it just to see what's going on. Okay, so we'll just keep an eye on that one too, and then we'll keep our eyes open. Remember, in the land of the blind, the one-eyed man is king. So that's a very important to remember. I'm going to post one that I love. I don't think it's not too much farther to go till we reach the promised land, but we want to take a look at this is the reverse VIX index on a monthly chart. This is a 3-drive pattern. I was listening to Andy Heck this morning from Tom's show yesterday, and I really like that trade. I might be wrong, but boy, it's got so much stuff going for it that it really is exciting from a technical vantage point. But that doesn't mean that it's going to work. It just means that that's just what's happening right now, and you don't have to go any farther than that. It's all about risk control. It's not about how much money you make or how much money you lose. It's how much money you don't lose. That's the key. Let's take a look here at crude oil for just a second here. We made that high yesterday, right at the 61% retracement on the high from 2017. That was January of 2017. We hit it spot on, and we broke all the way down to the 58.25 level. I think we were down. Yeah, we were down $2 a barrel, which exceeded the previous move down. The previous move down that we had in July only dropped, that dropped $2 a barrel also, and the one in July previous to that dropped $3 a barrel. So it's in the ballpark here that could be a pretty good low at that 58.20 level. What I would be watching is to see what happens if the market rallies in an ABCD structure to the 382 percentage in the crude oil, then that would be an idea to tell us whether we would be looking at something that would be, quite interesting from a sell standpoint. But that number would be up around the 49.40 level. We're trading at 49.20 now, so it's really not much going on, from that perspective. So that's pretty much it. What we're looking at, the bonds did hit that number. The high was 11. The number we were looking at was 11, so that's pretty much, or 12, so it's within one tick off. We're trading at 154.05. Bonds have to get above that 155 level to break the bearish scenario that we have, but that could do that, very, very easily. That's not anything that means anything. Regarding the gold and silver, we hit that 160. We hit the 1695 level yesterday in the silver, and immediately dropped 37 cents. I mean, it was really fast, within a minute of 10 cents. That takes a lot of selling, folks. That also brought gold down a little bit. Gold only broke about $7, but those are the ones that you're starting to see more volatility in all these markets, not just the foreign exchange markets, but you're seeing it in stocks, and you're starting to see it in bonds. You're seeing it in the grain markets. So a lot of these cycles that Norm and Bill Meridian and everybody's been talking about, Stan Harley, all of these are showing more volatility coming in. I believe that's going to hit the stock market, and that's why the VIX index looks so interesting, because nobody likes it, with the exception of a few people like Jeff Grunlock and Howard Marks, the big hedge fund guys. But the technical picture of it is really quite interesting. So that's the one I'm watching. We'll see how that really works. I mean, the S&P is certainly lagging, behind the rest of the market. That's basically what the price. You're absolutely right, Ace. The prices are green. That's the bottom line. The prices are green. You've got to go with what you see. And I'm just giving you my 2 cents worth, and believe me, it might be overpriced at that, but we'll have to do one thing at a time as we look at this. Remember, folks, the chart that we had from Arch Crawford yesterday, and this is going to be interesting to see what happens today because of the movement that we had and the fact that we hit the 22,000 level in the Dow. And remember, that doesn't mean anything more than at 20,000, 21,000, but we have a gap. We have a big gap that has to be filled at 20,300, and that's down quite a bit. I believe that gap will be filled rather quickly when it does happen, but we'll wait and see what happens as it occurs at that particular time. The one chart that I posted early this week on Monday, I'll bring this up here to take a look at it. This is the ABCD structure in the E-mini S&P, and as you can see here, it has a lot of harmony going back to the 2009 level. If you look at the far left there where the A point is, that's where the 3 drive to a bottom occurred on March the 5th. That's when we had all of these astro events occurring, and we were right at a 61% retracement of the low from 1987. That's when the Dow hit 64.64. The S&P was trading at 666. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we had a question from Mr. Z in the den about the euro. What's the best way to trade it? Because when we broke above that 117.10, that was very important. That was the highs from 2015. And since that time, all the corrections have only been about 70 pips. And the harmonic number in the euro usually runs between 40 for the half harmonic and 80 for the regular harmonic. And if you just look at that chart that we posted a little while ago, you'll notice that all it really did was just make these normal corrections. So that's really what you want to do. Every time it backs off between 40 and 80 pips, based on the parameters of risk that you have, that's pretty much what you'd want to be to see how it's going to be, whether it's going to work or not. If you get a break of more than 150 pips and you get below the 117 level again, then that's a possibility, of a major reversal. But that's 110 pips away, which in the euro is a great deal because those are $100,000 contracts, and that would be well over a $1,200 move. So it would take quite a bit to push it below there. So that's the only way that I would be looking at it as far as a reversal from that level. I mean, there's just too many other things that are easier, to trade than to try to pick a top in here. So just watch the retracements, all of them. Just look at them. Go back and, like Twentyman says, defy human nature. Do the work yourself, and that's what I think you probably should do. Let's take a quick look at Apple here because I wanted to show you the folks. This thing does trade really nicely with the numbers. What we're looking at here is a 2-minute chart. This was certainly after the news came out because it was trading at 149, and then it gapped up to just about hit 160, and then you can see what it's done over the past 3 hours. It follows really nice short-term patterns. It follows long-term patterns, and since we're talking about long-term patterns, let's just pull this up today for Apple and just see if there's anything here that might catch our eye. And if we put this up here, you'll notice that we have made a 1.27 expansion of the move from all during May through the 19th of June. That number came in at 160, and the high has been 160.10. We're trading at 158.70 right now. So whether that's a major high or not, I don't know, but it's got a GAP. It's got a big gap in here. And as we know, most gaps will be filled, but maybe not in our lifetime. But it's interesting to just watch that for regular purposes. Now, I've also had a question to talk about, and that is the grain markets. We talked about that yesterday when Cy Monley from Sylvia's Financial was on. I still believe what we're looking at here, folks, is the possibility of the November soybeans getting down to that 61% retracement at 962. We're now trading about 977. The best time to buy it is going to be 3 days from now. Wednesday, Thursday, Friday, looking at it Monday with the new moon. Let's try it again with a full moon and lunar eclipse. That's a really good day because it's an eclipse, and the grains work really well on the moon. So, and we already heard that from Norm Winsky before anyway. So that's the time you want to look at it when those ABC and Fibonacci numbers, complete. But what's important about this November bean chart is you'll notice that the rallies that we had ever since the high that was made back in early July were all fib numbers. The first one in the 25th of July was a 78% retracement. Then we had another one on the 30th, 61% retracement. We had a one on Monday at the 61% retracement, and then we've broken down badly, and that tells us that we're heading down towards that number. So I don't see how we can possibly try to pick out anything until we get to that level. That's what it looks like from me. So we'll see. The bonds have certainly exceeded the 154.12 level now, folks. That means that it's got a shot at the old high at 155.03, and it's not very far away. So, and if the market starts to shake and rock and roll, if we had a reversal type today, then you would be looking at something something pretty significant. So that's the bottom line. Looking at that one, we'll see what's going to happen, because it certainly could. It could certainly do that without any trouble at all. Okay. Oh, I have one other question here, not related to anything in the markets, but someone asked me if I ever met Elvis Presley. No, but I rode with him on the elevator once at Cedars-Sinai Medical Center years ago. And we'll see what's going on. The IWM is still going down, folks. We happen to be short that one. That to me looks like the weakest of the group. In fact, a good strategy to trade here for the IWM is every time it makes a new low on the day, sell more, and then just put your stop above the high. And if it doesn't work, send me a letter. I'll be on my way to Pogo or someplace like that. I don't know. But it does look like a bearish pattern, but, just wait and see. As a matter of fact, it was the NASDAQ that ran up first. Then it was the Dow Jones. The S&P hasn't followed through at all. But remember that NASDAQ 100 is only 12 stocks, the FANG stocks plus a few others. And the Dow is basically only 17 of the 30 stocks. So that's it. My complete address is, yes, I'll be happy to give it. It's 555 El Sereno El Dabeo in Tuscaloosa, Alabama. I'm on the internet. You just pull it up and you'll be able to get an Don't throw any vegetables at me, folks. This is tough enough to take a look at it. Yes, Mike, I'll be happy to take a look at the silver for you. Just give me a second here to pull up the little chart here on the old sliver, and we'll see what we've got. We backed off about 45 points in the DAX already this morning, folks. I don't know if it's going to be reversal or not, but it's certainly an interesting chart. We'll see. Remember, the stocks have to look the most bullish at the high and most bearish at the bottom. That's the bottom line of what we're watching here. Okay, we'll pull this up here, and you'll see here where we are in the silver. Give me 1 second, Mike, and I'll have this up for you. All righty, almost ready. Bada bing, bada boom. And we come up here to the silver. And that will be right here. Here we go. We'll take a look at it. All silver did yesterday was to go up and make a new high, by just a little bit. And believe me, folks, when it hit 1695, it went down so fast that you just, in order to prove it to yourself, do a 5-minute chart just to see how quickly it broke. And it broke that 40 cents. It stopped exactly at the 78% retracement of the low of the 25th. That came in at 16.45, and so far we've rallied about 20 cents from that level. But that's neither here nor there, so we'll see what's going on. Someone's mentioned that all the FANG stocks are red with the exception of Apple. And I don't know if that means anything or not. Those are one-trick ponies, folks, when you see those Apple things. You know, we've seen it so many times. I mean, Apple gets more free advertising, you know, than anybody. I mean, they get lots of free advertising. So that's the key, you know, to keep an eye on as I see it. All right, want to cover one more thing here, and that's this one right here. I'd like to really keep an eye on. I know we're trading down at around 990 in the VIX right now, but I believe that we will exceed these highs of the last 2 years above 40 sometime in this fall. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I would like to mention that Basil Chapman's giving his webinar tonight on sector rotation, and it's worth every penny, folks. If you've never heard Basil before, he's got some of the best information around, presented absolutely superbly, so I would certainly recommend you listen to Basil Chapman. You'll certainly learn something, plus you'll get his newsletter for a month, and I think it's worth everything. Just go to www.tfnn and there'll be some information on it, but he's a class act, and he certainly knows his stuff. There's no question about it. Okay, let's move on here. Keep an eye, folks. We hit 22,000 in the Dow for a few minutes. We backed off just a little bit from that level. Well, the NASDAQ backed off, it did backed off 44 points, which is nothing when you stop and think that it was up, 50 at one time overnight. So it's still an up day, but remember, we hit some big gap areas today in the Dow Jones again, a big gap in Apple at the 1.27 expansion number. Whether that means anything, we won't know for a day or two, most probably. But it's just interesting, the news is out there, but the market is basically, two-tiered. You got the IWM is down, and, the S&P is not doing very much, and it's basically the Dow Jones and the NASDAQ that have been pushing, and the NASDAQ is one stock. The FANG stocks are all down, so it's a one-way corrigan, so it's not very representative, and that's why that chart from Arch Crawford is so important. The fact that it's non-confirmation of the new highs to new lows, and that usually in the past it meant distribution, but maybe things have changed. I doubt it, but that's what it's looking at from that level. Tomorrow we're going to have Norm Winsky on as our guest at 9:30, so we want to certainly listen to him because he's got a lot of cycle stuff here in August that is very, very important. And then next week we're going to have Bill Meridian from the Cycles Research in Vienna, Austria. One other thing, need some white light, folks. One of my friends from the old Drexel days is on the way out. He has stage 5 terminal brain cancer, so we need some prayers. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.